Well, good morning. Happy Monday to you. I'm Marlon Bowling, your tour guide to the ag commodities. So glad you could join us here today as we get ready to kick off a new trading week. I'm joined by Mr. Brian Hoops, and he is the president of Midwest Market Solutions. He is based in Springfield, Missouri. Now, Brian, over the Globex trade last night, it looks like a little weakness here in the grain markets. I want to touch on the prices and then get your take on why they're doing what they're doing here to start out the week. Let's go to the corn board, and our quotes are provided by bar chart here. We are down 5 cents at 6.79 1/4 this morning, and about 3 cents off of our overnight high. So a nickel lower in the corn. Now on the soybean trade, well, we'll show November. We're down 13 1/4 at 13.82 1/4. We'll give January as well, since there's probably a lot of rolling of positions here coming up on the end of October. The January 13 lower at 13.91 1/2 right now. Generally, almost everything on the soybeans are around 13 lower here this morning. Now, over on the wheat in Chicago, we have December down 9 cents at 8.41 3/4. Meanwhile, in the Kansas City hard red winter wheat, we have December down 6 3/4 at 9.41 1/2. I want to talk about that one in just a second here. If we get to Minneapolis wheat, you have December 5 3/4 lower at 9.55 3/4. And on cotton, you have December down 143 points at 77.70 per pound. So there they go again, pounding the heck out of the cotton market. Brian, I want to go back to this Kansas City wheat market here for a second. We're down 6, not down as much as they are in Chicago, but Tim Ross was just showing on the radar map, there's all kinds of rain in the southern plains here this morning. Just what the doctor ordered. However, I guess I noticed that about the western third of Kansas, where a lot of that wheat is grown, missed out again. It all developed, it seems like, to the east and northeast and southeast of there. Is that why they're not hammering Kansas City wheat as hard, or what do you read into that?
Yeah, good morning, Marlon. That may be a good reason why they're not pushing that market lower quite yet, wanting to see how these rains actually develop. A lot of our rain is expected to fall Monday night into Tuesday, and we badly need some moisture here in Springfield as well. So I think, the market did anticipate this, or did see it on the forecast going into the weekend, and we were lower then, seeing some weakness, some follow-through weakness. But again, we want to see actually how much rain develops and if we need to take any more premium out of this market or not. We're seeing also on the radar maps better chances of rain for Argentina, where it's been very dry. I think that is starting to pressure corn and soybeans as well. You have crop progress this afternoon that should show, corn over half harvested, soybeans probably about 3/4 of the crop been harvested. And I drove around over the weekend up into South Dakota again, and there is starting to see a lot of piles of corn around Iowa and Nebraska, South Dakota regions. They're starting to pile up on the ground already.
That's what we were talking about last week, where I had seen the structures to hold the grain piles outside of elevators in Illinois. They weren't using them yet, but the harvest was only about half done in that area there. And I've heard a lot of stories where some elevators have stopped taking grain if they don't have a facility like that because they can't get rid of it. Barges are all backed up on the river system, and you just can't truck it out fast enough. It sounds like China knows that, and they're booking everything to come out of the PNW now, right?
Well, that's where a lot of the product is being shipped out of. And we'll probably see that in this morning's export inspections report, a lot of soybeans being sold out of the PNW. But, there's a major cost to get it to that area. You have to rail it by train. And sometimes, in some cases, you have to truck it to get to the rails. So it's a long, expensive process to do all that. Much cheaper to float it down the Mississippi River, but that's really not an option this year. So, it's going to be kind of a long, drawn-out process, I think, until we get enough rainfall to restore Mississippi River levels. So it's something we're probably going to hear a lot of talk about, corn being piled up and not being able to be moved, basis levels widening out, and then hopefully you don't see any forced demur being said by elevators and reneging on any of these grain contracts.
Well, and then as we had pointed out late last week, now we're hearing reports too yet as if we need anything else to worry about of vomitoxin showing up in the northeastern part of the Corn Belt. Oh my gosh, what a year. All right, we'll come back in just a moment, and I'll talk with you about the setup for our livestock trade. Remember, we had the cattle on feed report last Friday, and we'll discuss after this. Well, as I mentioned, we did have, after the market closed on Friday, the cattle on feed report for the October edition. And USDA came out with that about 3 o'clock Eastern time. And here are the numbers. The trade was expecting the on-feed number as of October 1st to be around 99.1%. It came in at 99%. Wow, they pegged that one. Placements were expected to be 96.3% of a year ago. They came in at 96%. They pegged that one. Marketings in September were expected to be 104.0%. It came in at 104%. Man, you talk about a lack of surprises. That was a lack of surprises in spades. They nailed that report. So let's go back to Brian Hoops. Now what? After they really accurately pegged that report when it came out, does it mean anything to the market here?
Yeah, probably not a tremendous amount, Marlon. From the standpoint of the on-feed number, it's friendly because that is the first year-over-year decline in the last 10 months. So if you look at it just from that standpoint, yeah, it's very constructive for the cattle industry. But as far as any major surprises, market movers, no, there's nothing in this report that stands out as a surprise to anybody. What did surprise me last week was last week's slaughter level. You know, the previous week was 660,000 head, which is really good. This week was 673,000 head. So packers really need this cattle to fill out these kill schedules. They're not slowing their chain speeds down. This is very bullish to the industry and tells us that they probably need more cash cattle again this week. So we're looking at steady to higher calls to begin the week. If we look at it from a chart standpoint, Thursday and Friday's lows was in the December contract, which had the bullish close on Friday, right around 151. Those lows in that area, there's probably going to be stops sitting below those lows, and if those would be hit, we probably could see a pretty big run to the downside in cattle in a corrective fashion. But again, just from a fundamental standpoint, there's no reason why cattle should go do that, as they're looking at another big kill week and higher cash trade this week.
Yeah, when you look at a December live cattle chart, I believe they took out the highs from a while back. But anyway, yeah, we finished up at 152.42. That was up 75 cents on Friday. That was in advance of that report, so we'll see if they have any follow through or not on that. On the November feeder cattle market on Friday, we closed 80 cents higher at 178.35. Now that chart looks totally different, where you have the live cattle up there at recent highs. Here you have the feeders really struggling. They're just trying to come off of recent lows. It looks like they may have made the turn. On the lean hog trade on Friday, we had the December contract $2.10 higher at 89.12. That's a pretty impressive chart formation right there, too, as it approaches recent highs. What do you think?
Yeah, you're right. As we move higher, we've seen a huge short covering in these December hogs. You're right, December cattle posted new contract highs. There is a cold storage report out this afternoon, 2 o'clock. We expect to see a little bit of an increase in beef and pork stocks. So, maybe you see a little positioning, especially in the hog market, going into that report this afternoon.
Okay, Brian, thanks for the help this morning, and good luck trading this week. Brian Hoops of Midwest Market Solutions with us. So, Janet, the table is set. We are ready to begin the trading day.